And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, making expert advisors for that work for MetaTrader 4, MetaTrader 5, and a whole lot of other things that can make us money in the financial markets. It is Thursday, April the 9th, and all eyes seem to be watching the Middle East to see what's going to happen there. It does play a huge role in our lives with the price of publicly traded oil, such as the NYMEX market, and that will help decide whether or not inflation is going up. In the meantime, we have some items today coming out that we might want to stay tuned for. I believe, if I remember correctly, I forgot to bring this screen up, so let's make sure. Yes, we do. We've got a whole bunch of things going happening today that could make the markets go bouncy. So, and we like volatility because volatility is what makes us money. So let's go ahead and go into our risks. Since we're talking about putting money at risk, we should talk about the risks, and you need to know about them. It goes something like this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And the CFTC risk disclosure goes like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of risk of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. Notice it didn't say a high degree of risk. It does say a high degree of leverage can work against you as well as for you, and that's why we talk about that. So let's see. Let's go ahead and see what's going to happen today. Here we have Core PCE. That's going to be the Fed's favorite metric of pricing stuff that consumers buy to see if it's going up or going down. Their primary gauge of inflation, their favorite gauge of inflation. Not sure how versatile it is, but it is their favorite. Then final GDP comes out today. We'll see if this number changes. Usually final GDP, it doesn't change that much. I know it was cut in half for the middle one. And the next month we'll have the preliminary on last quarter. Unemployment claims, that's been a nothing burger for quite some time. And personal income, personal spending, you would think would be a bigger metric, but it's still gets just a yellow candle, a yellow thing. And then we have Chinese inflation. Who knows what that number really is because they never tell us the truth anyway. All right, so let's go on to risk on, risk off. We are slipping into neutral. So everyone's kind of sitting back, watching to see what's going to happen with the Middle East. And with the strength meter right here from Market Milk and also Baby Pips. Highly recommend Baby Pips. They're a great platform. The New Zealand dollar's on top. Euros on Euro and the Great British Pound and the Swissy. Then right below that we have the dollar and the Canadian, and on the bottom we have the Japanese yen. So let's see what's going to happen today, or take a look at some charts and see what we think might happen today. And the answer is going to be not a whole lot until 8:30. So it's let me see. That's Bitcoin. I don't really pay attention to Bitcoin very much. A lot of the rest of the world does, but it's down to 71 and not really going anywhere. Consolidating bigly, and for quite some time since February, ever since it stopped crashing. So we'll go on from there. Since Bitcoin is not something I do want to take a quick peek at the US 10 yield. US 10 yield is what drives a lot of the currency markets. So and the DXY for that matter, and therefore the DXY. So with that, so we see the DXY, the US 10 yield coming off a little bit. Not a bad thing, especially if you live in the United States. It means inflation could be going down. Doesn't mean it will. That just means it could be if it gets a good start. And then here we have the DXY coming down to 99.01 and kind of hanging out there. We'll see what happens after 8:30, which is a big data dump. Let's see. With the DXY is kind of even. We also have the Euro versus the Great British Pound. I looked at the 4 hour earlier, and it looked like the Euro was gaining on the Great British Pound, but then you look at this, and maybe not so much. Euro versus the dollar, again on DXY, the DXY perking up is up around 116.75. I am involved in that trade. Selling after the mean reversion strategy kicked in with my EA yesterday. We'll see how that works out. We have the Great British Pound versus the dollar. Again, perking up again on the big crash in the DXY yesterday. New one, the Swissy. Let's take a look at the Swissy. I like the mean reversion characteristics of the Swissy, although it doesn't do it as violently as, or not as violently. But then again, this would be a mean reversion trigger here, and this would not be. This would be the not follow through on that. So that would be the trade going vastly wrong. Not wrong, but pretty much once it hits that middle median line, you want to get out. So it'd be a 78, about 30 pip trade, not bad. Increase your size for smaller for smaller trades. That's also hindsight is 20/20, and we don't like that. We like knowing what's going to happen before it happens. Then that's how we are getting an idea of a pattern reemerging that we can take care of. Nothing is going to be foolproof. EAs do not give you 100% market wins, although it would be a whole lot cooler if they did. Let's see. Dollar versus the yen. Right here we have the whole lot of nothing going on here. Not even a bearish reversion candle yet. I'm a part of a bearish engulfing candle. It's got to get above that one to make a bearish bullish engulfing. It's not there yet. Pound versus the yen, however, is perking up and stopping right at 213.19, which would be the same area there. That is what we call a triple top if it continues. If it stays there and starts reversing, that's what we call a triple top. And then look out below. There's a chance of it being a triple top. Also looking at double top here. Potential double top forming in the EU, or the EJ, indicating we could have a lot of Japanese yen strength coming on board, which would drive all these pairs down. UCAD is, that's kind of came down yesterday on the weakness of the DXY, but then it's kind of hanging out there. CAD versus the yen, right there. It is doing great. It's just kind of hanging out. Been consolidating for the past few days after coming off the slide. Not really going anywhere. Crude oil, $99 a barrel and gaining. It was 98 a few earlier this morning when I did my prep. And now it's coming down, going back up again. Aussie is kind of looks like it might be peaking out there, right below the one deviation, the one standard deviation on the Bollinger Bands on the 20-day moving average. So we will hold on off on that. 1-2 gold is the only metal perking up, and it's only perking up a little bit. 47.39 and could not be absolutely not going through the roof. Platinum giving up 1%, palladium giving up 1%, and silver starting to perk up a little bit. It's finally showing something. Besides being down, it's going up again. So we'll sit at 74. And then the software sector got hammered yesterday. Well, some of them, not really. Software sector didn't, but some of these others did. HubSpot off 4.2%. Salesforce off 3.6%. Intuit off 5%. GoDaddy off almost 3%. And NVIDIA up 2.2%. So the AI thing is still going strong on Wall Street, and we'll see how long that holds up. And Upwork is eked out just over 11 yesterday. So the software, or the the AI speak is still going on strongly on Wall Street, and again outpacing software because software is super easy to make now. It's super cheap to make now, and although it's kind of weird to maintain, I wonder if all these outages I see at Thousand Eyes is due to AI, the plugging in AI to their terminal, letting it rip. not something I do. But at any rate, with that, I also want to remind you that we have coming online soon tradingforexforprofit.com. It's coming online soon. It's easy to figure out because it says Trading Forex for Profit. Why do we trade Forex? For profit. And this is the of what is happening with that so far. But feel free, I mean, if you like, if you want to, feel free to start for free, because all of them are just free right now until I get it built out completely. Pricing is, the initial pricing is going to come off like this, with Pro being the package that might make more sense for everyone. Just kind of give it a shot, but the free one will be up and ready soon. And with that, that's about all we got today. Again, if you like this video, then check out the then hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, if you want to talk to me directly, go to the comments and drop me a comment, and I'll get back with you as soon as I can. So that's all I got for today. You guys have a great one. Happy trading. Bye.